Is position trading really emotionally easier than scalping?
Quick answer, no, because position trading tends to hold the position for a longer period of time, so emotion kicks in. Whereas scalping, you don't have time to get emotion involved.
You mentioned that you prefer generally to trade Forex and crypto as position trading. Why?
Mainly, I tend to focus more on majors when it comes to Forex because they have tighter spreads and more stable spreads, so it's easier to calculate profit and losses, and crypto as well.
Hello and welcome back to this week's episode of Exness Trading Talks. Last week we talked about copy trading and how you can implement that, some of the traders for whom it might offer a benefit. So if you missed that episode, please click the link down here and you can go back and you can watch it immediately. Now in this episode, we're going to be talking about position trading and how that works as a strategy and for whom it might possibly be best suited. I'm Michael Stark, Financial Content Leader, and here to give his impressions and his insights on this topic is Andreas Themistokleous, Trading Content Specialist. Welcome, Andreas. Thanks for being here.
Hello, Michael, and thanks for inviting me.
And when we talk about position trading, okay, we understand the basics of how position trading differs from scalping, for example, but what do you think are some of the most important psychological or emotional or practical factors that make it a different experience to be a position trader or to do position trading than to do scalping, for example?
So position trading is a more long-term strategy. So when that comes into trading, it means you need to have more patience for, a major swing, let's say, to start moving in the direction that you want it to trade, or you need to have tolerance to swings in between. In terms of timing, for example, you open a long trade, but you have some minor swings to the downside. So you need to hold in there, have patience and conviction that your strategy will work eventually. Because if you start closing positions the second that it turns the other way, then you don't have a strategy to begin with.
Yeah, it makes sense. No, I find that actually really difficult. That's one of the things that I find most difficult with position trading is finding a balance between, like, if I'm ever scalping, don't usually, but if I do, then I'm absolutely ruthless. As soon as I see it going significantly into red, I just cut it off immediately. Doesn't work to do that with position trading. So often I go to the opposite extreme of just leaving these losing positions open longer than I really should be. So finding that balance, I think, is essential. It's actually not as easy as people say, sometimes can be hard.
In finding the balance, what I personally like to do is I tend to use more pending orders and just leave it there. That's one of the ways that I deal with all this stress and resist the temptation of closing the trade once it goes the other way. I just open I put a pending order, I set my stop loss, take profits, and I just leave it there.
Yeah, exactly. And also, I think trailing stop in some situations, not necessarily trailing stop, but moving the stop up into profit, of course, fantastic feeling when you can do that. And then that way, okay, sometimes you maybe don't make the maximum possible amount of money, but like one of the things that very often happens to me is if I have a reasonably large rolling profit on a longer term trade, right, I'm like, oh wow, this is great. I wonder how much the profit is going to go further up. And of course, it just reverses and turns into loss. I'm like, oh man, so if you set up if you move your stop into profit, for me, that works really well to remove this kind of psychological risk of that happening. Yeah.
And you also keep the trade open for as long as possible in profit.
Yes. Yeah. That's right. Yeah. So what do you think, or can you give us any possible examples of key lessons, key mistakes that you learned from, or successes in particular that you've had with position trading?
Yeah, I like to think of myself as a patient person, but when it comes to trading, that's really gets tested, right? So one of the mistakes that I did is that exactly what we discussed. As the first second that I saw a trade moving the other direction, I just panicked, closed everything. But especially when it comes to profits, I tend to close my positions too early. So instead of adjusting my stop loss and take profits as the price, let's say, moved to the direction that I wanted, I tend to close quickly profits and let the losses run for extreme periods of time. And in multiple occasions, more than I like to admit, I'm burned out my accounts that way. So that's when I started using the pending orders, setting my stop losses and take profits and just leave the trade be. I spend a lot of time analyzing, but once I find my entry and exit point, I just leave it there.
Yeah, it makes sense. I think there's a lot to be said, not having totally rigid stops and targets, but having more or less rigid, and you only move them if there's like really a pressing reason to do so. Yeah, I think that's quite an important thing. So what do you think are some of the best instruments, in your opinion, are some of the best instruments to use for position trading? I mean, the advantages, of course, of position trading, unlike scalping, you can trade something even with really quite a high spread successfully, potentially, if you have an edge, you know what to do. But what do you think are some of the ones that you prefer personally to trade with position trading?
Personally, I like to trade more when it comes to Forex major pairs and also cryptos because you can get a lot of information like on-chain analysis, for example, for Bitcoin and some other cryptos. But when it comes to Forex, I tend to focus more on majors and mainly Euro USD. My personal take is that it's better to focus on a couple of Forex pair rather than chasing everything and anything all around. So why majors? Because they have more stable spreads and it's more easy to calculate. Let's say if something goes wrong, how much am I risking and stuff like that. Well, when it comes to exotic pairs, let's say you have a large spread which eats into your profits and it's more or less fluctuating, so you cannot really calculate from beforehand. So that's why I focus more on majors and cryptos.
Okay, makes sense. And if you want to know more about picking instruments and other specific aspects of strategy for position trading, please click on the link in the description to read the companion article for this episode of Trading Talks on Exness Insights. You could find many more details there. So maybe you can give us some practical examples. We could briefly take a look at some charts to give us some examples of position trades that you think have been interesting, or maybe even how the process of picking where to enter and exit when you're position trading, briefly.
Yeah, sure. So if we're checking the Bitcoin chart and we go back to the distant December of 2020, it was a time when the price reached the new all-time high at the time, which was around $20,000. I put some long trades just before the year end. So I opened the position, the price continued moving up, it reached the new all-time high. But then in early January 2021, the price corrected, not significantly, but started correcting, right? So that's where I panicked and just closed everything because I thought, okay, we reached the new all-time high, now it's gonna crash, right? That's what I was thinking back then. But I didn't trust. Why am I mentioning this? Because I didn't trust my strategy, which was buy before the all-time high. Didn't know it was gonna hit a new all-time high and just hold it because Bitcoin was getting too much traction back then, right? So I closed it in early January, and then guess what? It continued moving to the upside, right? So I didn't trust my strategy. I let emotion take over, and then I blew a very good chance. Imagine buying a Bitcoin at 20,000 and holding it until today. I mean, so yeah, that's one example I can think of emotion getting involved into my strategy.
Yes. And inevitably we get some of emotion in a strategy. You just need to try to minimize it, try to keep control of it. Yeah. Okay, so thanks very much, Andreas, for being here, for giving your opinions. Again, lots of really top tips for position trading, something to think about. And thanks so much also to our viewers for joining us. And hopefully join us again next week when we'll have the next episode of Exness Trading Talks. We hope to see you there.